morning and welcome to the business news on Sunrise. Coming up this morning, Government of Ghana suffers Treasury bill under subscription in tender 2012 as investors offer 4.2 billion cedis against 5.27 billion target. Also in this bulletin, civil society organizations convene in Ada to push for scaling up Ghana's underutilized salt industry.
Expansion of the salt project in the basin over here, I think it stands out as one of the world's best ponds for salt production. Alongside countries like Brazil, they can serve the world with good salt. In Africa, I think it stands as the best quality salt from Songola.
Plus, Ghana's emerging auto industry faces threat as removal of crucial value-added tax exemption spikes prices and slows local production. I am Christabel Success Trevor. Will bring you details of our stories very shortly. Please stay with us. The government of Ghana fell short of its borrowing target during its weekly Treasury bill auction on Friday, June 19, 2026, seeking to raise 5.274 billion cedis under tender 2012 across the standard 3 short-term tenors. The state suffered an undersubscription of 1.067 billion cedis that abruptly broke a 2-week streak of oversubscriptions. The following 3 Business News Desk reports has more.
Domestic investors offered a total of 4.206 billion cedis, desperate for liquidity to support fiscal operations. Government chose to accept 4.206 billion cedis. That is 100% of the bid standard, even though it meant leaving a major funding gap. Subscription rate was 79.77% and acceptance rate was 100%, while the undersubscription rate was 20.23%. The funding shortfall government experienced by failing to hit its target of 5.274 billion cedis was 1.067 billion cedis. Market dynamics forced yields to inch up marginally across the board. The breakdown of the auction shows that a short-term 91-day bill brought in the largest chunk of cash, with government securing 2.257 billion cedis, with government accepting 2.257 billion cedis at a yield of 5.30%. The midterm 182-day bill pulled in 802.87 million cedis, while government took all 802.87 million cedis at an interest rate of 7.13%. The longest tenor, the 364-day bill, brought in 1.146 billion cedis, and government bought all 1.146 billion cedis at a yield of 11.36%. Analysts point out that while the state took everything available on the table, it highlights growing hesitation among primary market investors to fully fund the government's current appetite for short-term debt.
Meanwhile, trading activity on the Ghana fixed income market was almost entirely concentrated in domestic debt exchange program bonds. Restructured instruments accounted for 553.72 million cedis, or 97.13% of the day's total market turnover of 570.07 million cedis. According to the Ghana fixed income market report for the 7,233rd trading session, institutional investors heavily favored shorter dated restructured debt to mitigate duration risk. The most actively traded security was a short-term DDEP bond maturing in February 2027, which alone pulled 137.08 million cedis across 10 trades, closing at a yield of 10.29%. The remaining 2.87% of market volume came from sell or buyback trades in government notes, while corporate bonds, new government papers, and standard treasury bills recorded zero trading activity. Civil society organizations, CSOs, in the extractive sector have convened for a crucial stakeholder engagement in Ada, focused on scaling up local salt production to unlock its vast, untapped economic potential. The discussions highlighted a stark reality. Ghana is currently far from maximizing the significant revenue generation and job creation opportunities embedded within its domestic salt industry. Speaking on the sidelines of the engagement, Executive Director of Revenue Mobilization Africa, Geoffrey Kabute Okanse, emphasized that further collaboration is urgently needed.
We have heard about their operations and how they are looking forward to maybe in the next 10 years expanding their operations. The community looks like having some other very nice alternative plans that they've also put to the table. I think a further discussion between the CSOs, Electrochem, MIF, and other partners and stakeholders who have supported the project would give us a very good and clear roadmap that will help the expansion of the salt project in the basin over here. I think it stands out as one of the world's best ponds for salt production, and alongside countries like Brazil, they can serve the world with good salt. In Africa, I think it stands as the best quality salt from Songo Lagoon. Young, brilliant people who are interested in doing the salt mining, I think it's a wonderful option for them. They have had the community mining going on from early generations, and these ones are also doing the value chain of the salt production. It's not only about just harvesting the salt, but then there's a long value chain that the youth can also participate in. And we look forward to the youth coming to the table and also adding their voice.
You just heard the Executive Director of Revenue Mobilization Africa, Geoffrey Kabute Okanse. Now, Ghana's ambition to become West Africa's automotive manufacturing hub is facing a critical roadblock. Local vehicle assemblers are warning that the government's recent withdrawal of the value-added tax VAT exemption on locally assembled vehicles is severely weakening the sector. Here's more in this following 3 Business News Desk report.
The tax policy reversal has forced up the final cost of Ghana-made vehicles, making it incredibly difficult for local plants to compete against cheap, fully built foreign imports. At the Japan Motors Tema plant, which assembles global brands like Nissan and Geely, management reports that expansion plans have slowed significantly. Instead of exceeding last year's output of 1,500 vehicles, higher prices have choked consumer demand, leaving the plant overaging just 138 vehicles a month. Industry players argue that for an infant industry, tax incentives are not fiscal giveaways, they are the essential boost required to build manufacturing skill. To compound the crisis, manufacturers like Toyota Tsusho point to severe logistical bottlenecks at the port, where prolonged clearance times for imported components frequently disrupt tightly sequenced assembly lines. While government faces immense pressure to mobilize immediate tax revenue, industry experts warn that frequent policy shifts destroy investor confidence. To save the sector, operators are urging the state to restore the VAT exemption, suggesting it be tied to strict performance benchmarks like local job creation and skills transfer, while utilizing state public procurement to buy local and drive demand.
Before we go, we'll take a look at how the city is faring against major trading currencies and how some of key commodities are also faring on the global market.
The interbank foreign exchange markets, the dollar is selling at 11 cedis 22 pence worse. It's gained 5 pence worse. The British pound is selling at 14 cedis 83 pence worse. It's gained 6 pence worse. The euro is selling at 12 cedis 86 pence worse. It's gained 5 pence worse. However, be guided that these figures could be higher as the Forex Bureau now. On the global commodities markets, Brent crude is trading at $80.57 per barrel. Gold is trading at $4,155.71 per ounce, down by $54.26. Cocoa is trading at $4,237 per ton. It recorded no price change.
That'll be all for the business news on Sunrise. For more business stories, please check out our website, 3news.com. My name is Christabel Success Trevor. The rest of the Sunrise team are on standby. Don't go away.